Hello, this is Stardust with Gamers and Dragons Day Trading. I'd like to talk about our previous live stream. It was a playback of June 23rd, and I had marked the higher level trend line, and I want to show you that if we had remarked as the day progressed the triangle pattern, we would take a shorter line going down there to where we see that following a line, and then as it got closer here, because here's the bottom one we had marked, and as it broke down, we could have followed it up and drawn another trend line and see this is our triangle here. So now you have everything. So now you have what we're looking for ideally, which is you've got a pattern breakout and a crossover, and it's above the white EMA, the 50 EMA. So I just wanted to point that out before we get into today's trade, which is June 24th. So I'm going to go ahead and disappear my avatar so it's not in the way of the screen, and we will move over to the June 24th and check out that chart and see what we see or don't see for the day for June 24th. Okay, now I'm going to take this slider, and sometimes it's hard to get it just what you want, so you can stretch it way out, and we're going to go over to the end of June 24th because we want to see the entire day up to close, and we're looking for 4 p.m. on June 24th. And so we're getting closer, 3, and that's close enough. Okay, so now we're going to scrunch this up. I like people to know this is a playback so that they don't go, oh, she's using a playback. And I have the date on my chart. Okay, so what we have here is I have a divider on my charts that says give, it's not showing. I'll have to check that later and see what I'm missing. Okay, so for this day, it's kind of tricky. I call this the cloud crawl. Now, again, I'm using the MA cloud, which is an indicator that you can get on the NinjaTrader indicator website, and it's the MA. It's actually the MA cross builder is what they call it, not the MA cloud. I call it the MA cloud. Okay, so it uses a 9 EMA. It uses a 20 EMA, and I'm just going to slowly scroll through my settings for it so that you can have them, but I'm not going to talk about it. And that's it. Okay, so let's go back here, and we're going to take a look at this chart, and we want to start this about 9 o'clock in the morning, and we'll see this is the 15-minute chart here, and look at that. It had a trend line breakout. And this is a trend line indicator that I use on my 15-minute chart, and it was showing that there was a trend going down from there, and look how it follows the first 3 top wicks, and then it shows this one from, I would say that's my previous one that I marked because it's my green color, shows the difference between the indicator and that. So you've got here a pattern on the 15-minute chart where it's showing an actual breakout of this pattern. And the pattern could be, I don't know, some type of triangle, or you could just take the swing levels here and call it a wedge. But either way, that breakout is coming out the top. So that's good. And that happened at about 9:15. If we middle click this candle, it shows us what the time on it, and it says 9:30. So we're going to go ahead and put that back down there. And take a look at this. Now, if we look at this 15-minute crossover at 9:30, it would start right about there. Now notice the price is above the white 50 EMA. So that means we can take longs. If we look over here, this is where we had our crossover at 8:30 in the morning. But notice how after the crossover, and we have to be very careful of crossovers, price went up, but it wicked back down, and then it went sideways for a while and back up. So if we had gotten in on this candle here, price went up to 475. It went back down to 170. It went up to 635. Let me put this on a larger screen because I'm having trouble reading it. Okay, so it goes up to 635, and then it goes right back down to 285, and then it goes down below the trade to 330 all the way to 475. Now, depending on where you had your mark, your stop loss, you could have been stopped out at this point. Goes up again to 215, it goes up to 135, and down to 735. Now, if you had your stop loss greater than $500, you would have lost it all there. So, I mean, having a $735 stop loss, I don't know, that's quite a bit to me in my books. I usually on NASDAQ am good with a $500 stop loss. I get ample space. But we're not, if you're a newbie, we don't want to be trading NQ. We want to trade micros, MNQ, and watch my video on micros and minis because that'll explain it. And if you are learning, you're likely going to be losing a lot, and you should be doing simulated trades, not live trades anyway. But if you are doing live trades, you can slowly build your account up with a micro, which this would be $73 with a micro. So you'd have a $73 loss, which is a lot better than a $735 loss. And so then price goes back up and it takes off. Now, look at this. What is our rule? We don't trade shorts. We don't take longs when price is below the 50 EMA. So it is actually floundering around below there, and so we have to wait for it to get back up above. So the problem I have with this is you don't know what's going to happen on this trade until you're actually in it losing money. And so if you had seen that crossover and you thought, oh, I'm safe to enter here, wick down. Oh, I'm safe to enter here, wick down. Then the candle turns red, and let's look at what that 15-minute candle looks like. Okay, how can we fix that problem if we're already in that trade? Okay, so now we go over here and we look at this 15-minute candle, the second one, and it's showing that that's a crossover, but the prior one, what time is this? This is the this is a 9:15 candle. This is a 9:30 candle. So what we're looking at is we want this first one here, the Well, that's an 855 candle. I'm just not getting the candles matched up that I want. Okay, so this was the 15-minute crossover. This was after the 5-minute crossover. Okay, so my rule is look at what's happening on the 15-minute chart during the crossover. Okay, so here's the crossover here. Let's move this to here so we can see the 5-minute crossover was right here. Now, what's happening on the 15-minute chart and what's happening on the 5-minute chart when we get this crossover? There are two reasons I see that we do not want to enter anywhere near this candle at this point. That it's the clue that it's going to be consolidating. Can anyone guess what that clue is? What is different about what we talked about for the June 23rd trade? Gonna wait for someone to see if anyone has an answer. Because I was told last time I didn't wait long enough for the answer, so I want to make sure that today I wait long enough for the answers. Okay, so here's a clue right here. When we have a good entry, our cloud will not be flat. It will not be skinny like this. Look at this cloud. It was a red cloud, flat and skinny. Here, it crosses over, changes green, and it's skinny. Over here on this chart, notice this cloud is flat. It was red, went down, went up, changed colors to green. We don't want to trade it yet. It was ascending. It went back down red. Now this is the 5-minute chart, and it goes back. So the trading day starts at 8:30. You don't want to trade before the trading day starts. So here's when the trading day started, 8:30. So now that the cloud is skinny, runty, and now we've got a crossover, but it is a skinny, runty cloud. Then it's still skinny, but it's kind of steep. Then it's flat, and it's descending. It's green with red edges. And our day has been wicky. Look at these wicks on these candles. Candle, wick, skinny, wick, skinny, wick, 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 wick. When you get an early morning wicky candle, that's your clue to stay out. If you come in and you see that it's been wicky, you want to stop and think, okay, it's been wicky just before I got here. Nothing but wicks. And so these are wicks on the candle, the tops and the bottoms. Some people call them tails. I call them wicks. So it's going up, go back down, up, back down. This is not good. It's not, so far, it's not a good day to trade. Too much wick. The cloud is flat. The cloud is indecisive what it wants to do all the way back through. But now look at this. Our cloud is starting to ascend. It's starting to get fat. We could take a look at this and see, oh, when price gets above this candle, some people teach that when price gets above this candle. Now, let me look at this. If I put mini trend lines in, these are what I call mini trend lines. You've got this going down. We're going to follow that. And so our price here went up, and then it went down, and then it went down. And so we want to mark that because we want to look for a breakout of this little mini trend line. So we've got this broken out. And you could enter here, but you don't know what's going to happen. It actually reversed back down $100 or $10 on micros. So it went up to $265 or $26.56, and then it went down to $10. Then it went back up again to $495 or $49, but then it went back down to what was this? $275 or $27. Okay, so now if we put our stop loss at just below, let's see, we want to see if we can see any good positions where we might place our stop loss. Okay, we had a low here. And that is the one closest to where we're looking at a possible entry. So let's go ahead and mark our trend lines here. So first off, we marked this, but then price shot up. Hold on a second. I got to turn off that alarm. Okay. Okay, so we're marking our candles here and looking for a breakout, but it's below the 50 EMA and there isn't one. So basically we aren't in at that time anyway. We're arriving, let's say that we're arriving at 9:30. We would want to mark our candles from the 9:30 point. What candles we see at 9:30. So at 9:30, here we are, and we're going to mark our triangle like this. Okay, then we want to show again, here's 9:30. We're going to mark our triangle like this. Okay, but we could also say, well, that's not really giving me a pattern I can work with. So let me mark the triangle. And again, at 9:30, here's what we're seeing is this. We take it up to that pattern. Okay. So we've got this top one marked at 9:30 because this is all we're going to see on the chart. This, okay? This is what we're seeing at 9:30. We're seeing that we've marked that, and we're seeing we've marked that, and then we mark something closer. We mark a trend line closer. And so that's where we start looking for a breakout, and we see this breakout, and price is above, price is breaking out above, but it's still inside this long-term trend line. And so we could decide that we want to wait until it breaks out of this long-term trend line as indicated by this candle here, this one, and this one. So if we wait a bit and wait for this to start ascending, we then see it's broken out, but and it closes outside. We want to wait till it closes outside. And it has closed outside, but the next candle is red and it goes back down. Now notice it did start up a little bit green, and some of you might have gotten in on that, but then it turned red and went back down. And typically when I buy a trade, I'll click buy, and that that puts a box up on my screen where I can say okay. So I have that ready to go, but I wait a few seconds to make sure it's not going to change color. And then I also look at the rest of the stuff on my screen, which is, let's see if it was right here. I look at what's happening on the 15-minute chart. And this was the 950 candle. This was the 10 o'clock candle. So this hasn't yet happened. It won't happen until here when the 15-minute candle turns red. But it broke out because we're looking for a pattern breakout. It broke out of this trend line, or a trend line breakout, broke out of this trend line, turned red, went down, went back up, went down again, then back up and down again. And so it's fighting right here below this trend line to decide what to do. Then we get a big, huge red candle that goes all the way down. And then we get this green candle that goes up. This is really a bad day to trade. I would probably, I don't know, it's probably something that I might say, you know, now's not good. Maybe I'll check back in the afternoon. But let's look at what happens if you decide to trade in Q and you decide to take these trades. So first off, I see this little pattern breakout and I want to take it because I've got FOMO. You're missing out. So I go up to $200, go down to $175. Now let's assume that our stop loss is going to be down here about $500, okay? So I enter here. It goes up, back down to 175, up to 420, sucks back in, eventually goes all the way down to me potentially losing $300 and some dollars. Okay, then it goes back up again to 635 to 830, down to 320. And this is what NASDAQ does. This is what NQ does, is you have big wins, big losses. And so you have to be careful. And I'm saying, don't use NASDAQ if you're a beginner, because this could have hit your 500. We don't know. Look how close it got to it. Boom. And I like it at $500. Some people will say, I'm going to move it just below the previous candle that I entered on. And if you even said, I'm going to move it below the previous, you know, candle here, that's $500 some dollars there. So I marked to this previous swing level that we showed here. Did I cover it up? Oh, there it is. I marked this previous swing level here that was closest to price and put my stop loss below that. Okay, so let's get back in. So this is what I call the cloud crawl, because you are, say, anxiously getting into this, risking this money. You didn't wait for the trend line breakout, and you lucked out, and it goes up to 1,370, but then it goes back down to 760, or in this case, $138, $74 on a micro, back up to $196 on a micro, $132, $121, back up to hit a $2,000 profit target if you can handle that. I personally cannot. because I freak out, I get squeamish, and I manually close when the candles get fat and red. And so this is it, you know, what's your play style when you play games? Is your play style, say you go into Fortnite, do you go in and hide behind the trees and be very careful and do the sharpshooting? Or do you go into Fortnite and you run out in the middle of a party and start shooting everybody, and you're not even hiding behind anything? You're just out there and, you know, YOLOing it. Well, you'll make a bad trader if that's the way you do it. If you're smart, you know, that you actually pretend that this is real life and I could get myself killed if I do this stupidity, then you would make a good trader. So there are several ways of taking this trade today. You could wait for it to break out above and close outside. This one here, once you've got this big volume of 5,735, and then this one comes in at 6,005, and it reaches the top of this red candle, that's a good entry right there. Now you could get your $350, or that's only $35 on micros, but that's still $35. And your fee for a micro was a little bit over $1. Then depending on who you use as your broker. So if you were to just say, I'm going to let this ride up to $200 or up to then let's see if it would have hit. So now I made the mistake of letting go of that. This is the other one. Okay. There, this is our second entry. So let's see if it would have hit our $200, and we've got it. Didn't quite hit the $200. Do you want to monitor your trades, or do you want to just set them and forget them and see if it hits your profit target? If you're choosing the second one, that's, in my opinion, foolish, because it could get close like this. It could go to 1,960 and not hit your 2,000, or it could go to $196 on micros and not hit your 200. And then all of a sudden it's going back down, and it might go all the way down, but it was close. And you might say, well, that's close enough. When it hits these two candles, I'm just going to manually close it for 180 or whatever. Or you could, because here now it's consolidating. See these candles? They're going sideways. Your cloud is flat and sideways, and then it starts taking off again, and then you could hit your 2,000 now, or your 200. So some people will set it and forget it, and they'll leave because they're even more squeamish than I am, and they don't want to be there. They're like having their stop loss in, and they're going to, you know, just take the risk. What you can do is you can monitor it until it's above your stop loss, until it's above your entry price. Say we entered here, and you want to move your stop loss from the negative 500 up into the trade to maybe about $25 or $2.50 on a micro. But say you want to move it up just enough to cover the fee, and then just go ahead and let it ride. Now, if you're using funded trading with a trailing stop loss, with a trailing trailing threshold, if you're using funded trading, you can't get away with that, because they will penalize you for having gotten up to almost $2,000 and then let it go back down to your $25. And then you will be out on your funded trading out $2,000 because they considered that that's a loss because you weren't monitoring your trade and you let yourself lose all the amount that you could have had. So you have to watch for that when you're doing funded trading, because you will get penalized for setting it and forgetting it. And most funded traders have a rule that you are not allowed to leave the charts. You have to monitor them so that that doesn't happen. Now, some of you might say, well, that sucks. Well, if it's your own money, yeah, you can do that. If you're happy with winning $25 at the end of the day, if the trade, goes south and you lose it, or you could just monitor it and say, I'm going to keep as much as I can because look at this candle that's gone red and now I'm in trouble. So the way a squeamish person like me would have done this is I would have entered on this candle here, and then it went up to here to $50. And then as it started to go back down, I would have freaked out. And then it goes back up again, and I'm feeling better. And then it goes down again, and I'm freaking out. It's $55. Then it goes up again. And then it starts to go down again with a candle that is more bullish looking. See, this one is, these are skinny little wicky candles. This one is more, bearish. This is a bearish strong candle. I'm probably would have exited maybe about there and just taken the $94 or the $945. Okay, so, but what if I want to get back into the trade again? What if I'm like, oh, shucks, man, I blew that. I should have stayed in. But that is a big loss that you're suffering if you don't watch your trade and exit, because look at this. It went all the way back down to 440 from a potential $1,000 trade. So I say set your profit target to 100 or 1,000, and in certain circumstances you might want to just let it ride and go, but you can always pull your your profit target up as you go, and we'll demonstrate that down the road. Okay, so let's look at our comments here. So Darkan is observing, and he says, I will do minis. It's better because you don't risk all your funds on one trade. Very good. Good job. And he asks, do I trade gold? I have tried gold several times, and gold is not my friend. Gold does not like me, and I don't think I've ever won a trade on gold. It's just a market that doesn't get along with me. And I've also noted that the commodities, gold and oil seem to have higher fees than the for the NASDAQ future style things like NASDAQ and S&P, Russell. Okay, if it's a building, I would make a tower and hide, but I'm a bad Bob builder. Yes, so Darkin, good job, because if you're playing Fortnite and you're going to build a building and hide, you don't have to build a building. There's plenty of buildings in there. But yeah, some people are good building. But what I love about Fortnite is they changed it so that now you can enter into building mode or non-building mode. So for those of us who struggle with the building, I can build, but not as fast as those people. But if you struggle with that, then you can play with other people who aren't building, because definitely if you're a good builder, you have an edge over everybody else who is not building. Okay, so let's go back and look and say I arrived here at 11 o'clock in the morning. Right here on this chart. Okay, so let's look at the other charts over here. And we're saying that this is our 11 o'clock. So at 11 o'clock, the 15-minute candle is red which is a tap back down to the cloud. And that's what I love. I love it when price taps back down to the cloud. And that's what's happening here. Price is going up, and I'm going, okay, at some point, it's going to be tapping back down to the cloud. So we would mark a little trend line here. And this one, and of course, that hasn't been made yet. So this one is made. Then we mark this one. When this candle comes up, we change our trend line. And then this one taps back down to it, goes below it. And then this goes up and it comes back down below our trend line. And I'm going, oh my goodness, it's time to get out. It's thick, it's fat, it's below the trend line. You can get out or you could stay in. And now this is a tap back down to the cloud. And look, the cloud is flat. Five-minute cloud is flat. And this is mostly what we want to look at is the 5-minute cloud. 5-minute cloud is flat. It's a little bit descending. And then it's going to go back down. So we have this price went down to here, ended up here, went down to here, and then back up. Okay, so now we're happy because we got our tap. Price went inside our cloud, which is always a good sign, and it also almost tried to touch the 20 EMA. So this is a good sign for us that we can get back in. So we go, and as soon as it hits above this red candle, that's a good signal to get back in, but it's a wicky day. Look at our ratio. Green, red, green, red, green, green, red, green, red, green. Look at that. Do you want to be trading on a day like this? I don't. I wouldn't trade this day. But if you are FOMOing and you have to trade, then let me help you get out of this trade. Okay, so basically we're sitting here and we've got price is now up to 200, but then it goes back down to say this was my entry point. It goes back down and I'm back out 125 or $12.50. Which could you lose more? $12.50. So let's put this below the swing level here. And this swing level doesn't exist yet. So what would we use to put below? Well, some people say the bottom of the previous candle. Maybe you would put it below the previous candle that is lower than this candle's entry, which might be this candle. I'm still struggling with where you put the stop loss. I mean, I usually just set it on NQ at 500 on MNQ 50, and that works for me. But you listen to all these gurus, and they have all this advice. Set it below your entry point, boom, which would be here. Set it below the previous, I don't know. They've got all kinds of stuff. I've seen some with stop losses that are $900 because they're moving it below the 50 EMA. You just, and I don't want to lose that kind of money. So I think there needs to be a happy medium between losing too much and having your stop loss too little. Now, in this case, if we were to look at what is the most from here, the price went down, that's $300. So if you had a $500 or $50 stop loss in this case, that would have been enough to keep you protected. Now, do you want to lose $500 on NASDAQ? If you're making, you know, $2,000 a day, that's not bad. $50 on MNQ. Okay, so let's go back up. Say this was our entry. We're now 155 in the hole, and we go up, wiki, 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 all the way up to here. And we don't have our, this is a $90 trade. We don't have our $100. So I entered at 11. I got in here, and I'm saying here, it starts going back down, and I'm saying that's good enough. Look how fat that candle is, and I'm going to have it going down, and I'm going to manually close it and take the $77 or take the $770. So this is a candle volume, the V about 7 down, 3,563, 4,173. Okay, or maybe you're daring and you want to keep holding it, but look how much your price went back down. You only took a, if you decided you chickened out, it went below the cloud and down, you take a $150 profit, then you see it going back up again. So when you're looking at these charts, hindsight is always better than foresight, and you just never know what you're actually going to feel like during the actual trade. So say we got in and we decided, let's just take this when the candle turns red. Okay, so now price goes back down, taps the cloud. We like cloud taps. We could hold this and say it's just a normal tap. But when it starts going back down to the 20 EMA, the backside of this cloud, that gets really scary. So what about re-entries? Let's talk about re-entries. It's tapped. Say we don't arrive until 12 noon. So we see price went down here, and we're real happy because we like that when price goes into the cloud, and then we've got an ascending cloud going on. And then we have this one closes, it closes green. So we're like, oh, it's going to continue on. So let me enter here. So we've got our $200 on NASDAQ, and we could take that $200 knowing it's a choppy trade. That's one thing I've done on choppy days. I'll tell myself, oh man, you were stupid. You shouldn't have been trading today. I'm in this trade and it's so choppy. I'm just going to take a $200 profit instead. $200 a day isn't bad. Let's do the math on that. Okay. Say you have $200 a day times 5 days a week. That's $1,000 a week times 52 weeks. That's $52,000. Isn't $52,000 for 10 minutes of work pretty good? If you're doing $200 a day as your profit target. Problem with that is on NQ, a $200 stop loss is nothing. You could lose that just right away. You want to be safer with something a little over $500. But so that means that if you're taking a $200 profit and you have a $500 stop loss, you'll never recoup that money if you even have like, for every 2 wins, you've got 1 loss. No, it's $52,000 a year, not a month. Unless you're talking 20 contracts or a funded account or something. Okay, so $200 a day, if you have a funded account that allows you 20 contracts or 20 accounts, that's over $1 million a year if your goal is $200 a day. So I'm saying this is the way I do it. You get your $200 a day, you trade micros, or you trade a less volatile market like Russell. I do like RTY Russell. That's kind of, to me, this is the level. You start out with MNQ micros, then you work your way up to multiple contracts, and eventually you go to minis, but you skip NQ. You don't trade NQ, you go to Russell RTY. And so Russell is kind of a little bit less volatile than NQ, but gives you a little more oomph than your micros on MNQ. Okay, so now, say for instance, we didn't close at our $200. We go up here to 270, and then look at this big fat candle going down to 415, freaking us out. We're totally upset. It's big and fat, and we want to manually close before we lose too much. Now, you could manually close, or you could just say, no, I set it to $500. Let me see what happens. Do you really want to do that? I don't trade on days like this. Okay, so then we let's just say that we took that 280. It got, by this point, we've had a swing level here. See these dots? This is the swing indicator. We've had a swing level here. And so we're saying, how about if I take profit near the swing level? So you set that to 325, but that candle goes up, misses it, and wicks down. Okay, this is be a good sign for you to manually close at this point, because it tried to reach that and it skinnied down and it went down, and you could manually close it. Okay, but now you're out $410. And is that where you had your stop loss, or did you have it 400 or 300? So, or you're out for $41. Loving the MNQ, aren't you? Being out $41 instead of $410. I am. I'm like, no. Why do I want to lose $400 if I could lose $40? Sure, you have to work harder. You have to do more trades to get that $200 a day goal if you want to stick with the $200 a day on micros. If you want to YOLO it and go for those $1,000 things, you're going to have to risk big money. Okay, so here we're saying that we went ahead and took a $200 profit. We set our profit target to 200 because we realized this was a crappy day we shouldn't have been in. Okay, now price goes back down, touches the back of the cloud. Price goes back up. That's a good sign. And we look at this candle. It's too skinny, but it goes back down in, and then this one goes up and it hits the, it's a fatter cloud. We can visually see it if we have our equal volume candles on here, equal volume candles. And we can visually see it building up and getting momentum. So we go up, we hit our 375, goes back down to 200. We could take that 200 and end, or we could keep going up to 445. You know, there's always that feeling of, oh, crud, why did I close that trade? I should have stayed in it. And then we go back up to 465, back down to 270 or $27, back up to hit our, let's say we want a $500 profit target. It's that $500 profit target and we're done, okay? Or the $50 profit target. So if you're shooting for $200 a day, you could have had $80 here, $20 here, so that's $100, $50 here, $150, and you're saying, I just want that extra right there. So it's flat, it's consolidating right here. See this? It hasn't broken out, it's consolidating. But now we think that this is a good entry because we're looking at it and it turns green, tapped back, went here. And so maybe you want to take it. That's $23 before it goes back and reverses. to $75. Okay. So, or $8 on the M&Q. And then it goes back up and it hits $625. Or if we set our profit target to 500, it's hit our 500 or it's hit our 50. So if you're on M&Q, you could set your profit target to 50, your stop loss to 50, which is a 1-to-1 ratio. But this day, look at these candles. Here, they all start turning green. Green, 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 but they're wicky. Here, as I pointed out, they're red, green, red, green, red, green. You know, bad time to trade. Me personally, I won't trade before 11. Too much of this type of activity is going on. You can look at this and say, look at that. It was a straight shot up. It wasn't a straight shot up. It was bad ratio. Your red, green, red, green. That's a bad ratio. Anything could have happened. The market was indecisive. If someone stayed in this, they were lucky. They were lucky. This here is better. Cloud is ascending, not as sharply as here, but you've got a solid trail of greens, but look at all the wicks. It was turning red. It was turning red. It was going south. Okay, so then you get back in, you try again over here. $50 trade on your micros over here. $50 trade on your micros. So these are what I call cloud taps. I've got this one here. We're going to follow this, and then price breaks below, taps that cloud, goes sideways, goes down. We're going to put a trend line here to see, say we arrive at this time here at 13:15, 1:15 p.m. Central. Okay, say we arrive at this time. So we see this breakout and we say, oh, it's a good breakout. And then price goes back down red. So we're going, we better, so we wait for this candle to close. So then price goes red, red, down, down. We're going to mark this again. Cloud is sideways. And then we take off back up again. And we can wait till it is above the previous candle, or just wait for this candle. Either one works. Get back into this trade for $44. And that's the highest it ever got, it's $44. So what you have to look at is, and let's look at this together, is we had our crossover was over here. There were no crossovers since then. So we've got a section of red, 1, 2. Oh, these are so bad. 3, 4, 5, 6, 7, 8. Goes back down. So what we're dealing with is that usually on a good day, when you're going up, you might have the 2 or 3 pullbacks as normal. But this is getting so far apart. Here's our, and the reason I have the 200 EMA on there is I measure the distance between the 200 EMA and where my top of my cloud is, and that's $2,450. At some point, price is going to have to go $2,300. So it's 2,300 from this spot. Wait, from this spot, it's 1,600 or 160. From this spot, it's 2,160. This is the MA gap between the 500 and the top of the cloud, which is the 9 EMA, 2,300. And whatever market you're choosing, they will all be different. So you'll have to go mark those. That's about 2,300. At some point, right here, when we start to see this consolidating, we should not be trading. I mean, taking this trade is like you're going, oh, I got to get a good trade in today. Let me get in and get this one. Well, $440 is good on NQ, but you had to do $500 to risk it. Let's say we got our $500 here. We put it down at $500 where we put it below the swing level, $440. Do you want to risk $440 to get a $440 trade? So that's kind of the thing that you have to decide on these choppy, wicky days. Okay, so then it goes sideways. It's after 1, it's going sideways. You might get something at 2 o'clock. So you check 2 o'clock, which is 1400 Central, 2 o'clock Central. And sure enough, there's one trade, but it's a $44 trade. It doesn't even hit your 50, unless of course you took this candle out when it hit partway out, but that's always dangerous to do that too, to not let it close. But then it just starts going sideways some more, and then it goes south. And if you tried to hold it for that, you know, $1,000 trade or $2,000 trade, then you've lost. So again, this is how you can mark your chart. This is a mess. But the MA gap at some point, that means when you get a gap that big between that, you can learn what is normal for it to keep going. Evidently on NQ, you can hit 200, 2,000 and still be in the trade. But you can also notice, oh, wow, this is getting so far that pretty soon these are going to close up and it's going to be reversal time. And here it's decided to do a reversal. And we're going to look at that and see how much it was when it decided to reverse. And that was the same thing it's been all day. It's around 2,000. So it's still going sideways. It could go back up. We don't know. That's evening. We're done trading. We're out playing video games. We're playing 7 days to die. So anyway, I'm going to close this out and give you a chance to ask any questions before I close it out. And let's look at our messy charts. I don't mark my chart up like this when I'm actually trading. So yeah, if we looked at this, so I'm asking if anyone has any questions while I still sit here and yammer on about this. Okay, so here's our Heikin Ashis. I pronounce it Heikin Ashi, but I know I'm doing it wrong. If we were to take, and here's what you can do. I actually have my chart set up so that when I draw on one chart, it doesn't draw over here on these charts, but I can paste those in. I can paste those in and see what's happening on the Heikin Ashis. So that's the, oh, I guess I removed my drawing line. There it is. Okay, so notice here, the Heikin Ashis were wicky. It went sideways for a long time, turned red. It shows it went green a little bit, turned red, went south, then it went up a little bit. So you need to look at the Heikin Ashis and see what color is it when I'm entering. Does the 15-minute Heikin Ashi, the 5-minute Heikin Ashi, and the 15-minute candle, and the 2-minute candle, and the 5-minute candle, are the candles all the same color? Now, you don't have to trade on the cloud being all the same color, but you can trade on the candles all being the same color. Now, I do want the clouds the same on the 2-minute and the 5-minute charts. They should be the same color, but the NQ, I'm sorry, the 15-minute cloud can still be red, but descending sharply. And then, it can be green, descending sharply. See, this one is starting to descend. It can have red edges on both sides and be coming to a point. And you can enter on that if you've had a 2-minute crossover south or a 5-minute crossover south or short, bearish. And so another thing you can do is you can treat this like a trend line and kind of put a trend line and mark on it. And so when you start seeing these going together to a point and the other two charts, and they have red edges, the other two charts are also showing that the candles are red, and the candle on your 15-minute is red, and it's not, and everything on the other charts look good, you can go ahead and consider your crossover. I like to wait a bit after the crossover because of what we've seen today, that when you get into these, like this crossover, it's going to consolidate and then shoot back up. And I found that that happens so often that it's worth the wait. Now, if this candle hadn't been wicky and had been a huge, solid, strong, bull, fat, engulfing candle on the green, I would have felt confident getting in at the crossover. But this one, look at it. It wasn't a confident, the cloud had been flat the whole time. So that's a cue to me that it's going to consolidate before it actually starts rising up into what we want to look at for a good entry. So this is an example of what's a good entry, what's a bad entry, and I hope you learned something. And you said, Darkin asks, Messi or Ronaldo? I don't know what that means. So, sorry, I can't answer. So, we're going to be done for the day. Thank you for participating in our journey. And let's learn this together and learn what we see on the charts. And if you study and back test and do your playbacks, your market replays, and you look at what was a good winning trade, what was a bad entry, that if I had taken that crossover, was it a bad entry? Is the cloud fat and descending, or is the cloud skinny and flat? This is what we're looking for, these types of things. How far was this MA gap? And take notes, find out, okay, I'm trading this market, and usually it reverses when the MA gap is at this price level. And so I use a indicator here that is called, no, that's not it. Let's take a look. I use an indicator that is called the ATM strategy identifier, and I can set this to currency, which I do. You could set it to points, click apply, and now all of these are going to be, no, I did something wrong. Oh, that's different. That's different. Sorry. My ATM strategy identifier is what I use for when I'm actually taking a trade. Sorry, excuse me. Then the price line. Oh, this is just, okay, so this is a drawing tool. Okay. Over here to the drawing tool, and I can set it to be currency, or I can set it to be points. If you don't like working with currency, you can change it to points. I prefer seeing the actual dollar amount. Some people are, no, don't show the dollar amount. Okay, well, that's it. We'll talk to you next time. Thank you, and goodbye.